Okay, welcome back everyone. So we are going to continue now with questions 6 and 7 in the session. So question 6, let's quickly see what was required of you guys. Okay, so you can see question 6 is a 20-mark question. So if we go to the required, they ask you to calculate the profit for the period, and you may use any method or layout. As soon as they tell you something like that, it means it is something that you guys probably have not seen before, and they are testing specific concepts. So do you understand the basic accounting concepts? So this one specifically, based on what they've asked, was a combination of applying information from your first semester and using information from your second semester to get to the answer. Okay, so before we start, let's quickly look at what information that they give you. So the first thing they did is they tell you the owner of Time Traders requests you to calculate the net profit for the year. Mr. Minute, the owner, has not been very diligent in keeping records, and he has presented you with the following information. So the fact that he's not been diligent with keeping records means we are dealing with incomplete records in this scenario. Okay. So that means some of the information will not be available, and you will be required to use different ways of getting to the same answer. So let's see what information have they given you. They've given you his assets and liabilities at the beginning of the year, financial year, were as follows. So they've given you the equipment at the carrying value, vehicles at carrying value, trading inventory, cash in bank, debtors, creditors, loans at the bank. Then they tell you the bank statement shows a credit balance of 48,000. Now, a bank statement, if it's a credit balance, because it's a bank statement, this means this is a favorable balance on your bank statement. If they tell you it's a bank account credit balance, then it would have been unfavorable. So you need to read carefully, is it the bank's document that you're looking at, or is it your physical general ledger? Now, because it's incomplete, we generally use the bank statement. So credit balance on a bank statement is positive for the business. If it's a debit balance on the bank statement, it is a negative or unfavorable balance for the business. Then they tell you all cash received has been deposited, so we don't have any cash on hand that needs to be taken into account. They tell you a stock take performed on the 30th of June shows inventory on hand at a cost price of 230,000. So this means this is the balance as at 30 June. So this is the balance at the end of the year, or what it should be. Then they tell you the debtors balance at the end of the year is 38,000. Creditors balance is 16,225. Okay, so this is also at the end of the year. Equipment was purchased during the year of cost price, so this needs to be added to your equipment to get to your year-end balance, or the end of the year balance. Okay, and depreciation on vehicles and equipment, and this would generally have to be deducted from your assets balances to get to a closing balance. And then the owner took 23,000 in cash for personal use, which is drawings, and 5,000 was repaid on the loan during the year. So we have to deduct this from your loan to get to the closing balance. So based on this information, you can see they've only given you assets and liabilities information. They haven't actually given you really any income, any expenses. So this is why I say this is a combination of what we've got from the first semester. Now, if we go back to the accounting equation, we said owner's equity is your assets less your liabilities. Okay, so they have given us enough information to actually work out the owner's equity value based on working out what is the total assets, what is the total liabilities. Okay, but now remember, that our profit for the year is normally the movement between your owner's equity balances. Okay, that's if there's no other owner's equity adjustments, that being said. So that means we will have to work out the owner's equity at the end less the beginning of the year to get to a movement amount. Okay, so now you can see you actually have to do this calculation twice. But like I said, in owner's equity, profit is not the only movement. We also have to take into account any drawings or capital contributions to get to the profit value. Okay, so at the end of the day, to work out the profit is going to be our balancing figure. So our first step, just taking a step back, we would have to work out the owner's equity. So the first thing is working out owner's equity in the beginning of the year, owner's equity at the end of the year to get the movement to owner's equity. And then we'll have to look at, was there any additional capital that was contributed? Was there any drawings amount? And then the balancing figure would be the profit. So if I then take the opening balance and I add any capital, deduct any drawings, and then make an X for the profit, the closing balance should equals the closing balance. And then if I do a normal accounting equation, I should get back to the profit. Okay, so let's go look at how you were supposed to do this calculation. So I'm just going to share the Excel file where I've done it. Okay, so from the Excel file, what I've done is I've put here, just to remind myself while working this out, what is the owner's equity? How is it calculated? This is just to help me stay focused while doing this calculation. Okay, then I've done a column for the asset and liabilities in the beginning of the year, assets and liabilities at the end of the year. Why have I done it this way? Then I only have to write the respective assets description once. I don't have to do it twice. You do not have to do it in a table format. You could have also just done it and said assets at the beginning of the year equal and show the calculation, assets at the end of the year show the calculation, but this is just to set it out nicely for you. Okay, so based on the information in the question, we know that equipment at the beginning of the year was 75,000. Based on the additional information, we know that we've acquired additional 5,000 Rand worth of assets, which we've purchased, which means our equipment was 80,000. The vehicles at the beginning of the year was 125,000. There wasn't any additional information about a vehicle purchased. Okay, so we also do the 125. Trading inventory in the beginning of the year was 180,000, but then based on the additional information, we know that based on the stock take, our trading inventory is 230,000 now. Then cash in the bank in the beginning of the year was 32,000. And then based on the additional information, we know that the bank statement shows a credit balance of 48,790. And because it's favorable, I show it as a positive. And then debtors was 31,500 in the beginning of the year. And at the end of the year, based on the additional information, it was 38,000. Now, in the beginning of the year, there was the depreciation was already accounted for, so we would just add it all together. However, at the end of the year, we still need to account for the depreciation, which was the 20,000 plus the 15,000 needs to be deducted. We would generally include it under your equipment or your vehicles amounts, but you could show it separately as well. So just deduct it here So our assets at the end of the year is 486,790, where it was 443,500 in the beginning of the year. Then our liabilities in the beginning of the year was 8,500 for your creditors, whereas it is 16,225 based on the additional information at the end of the year. Our loan in the beginning of the year was 50,000, and then at the end of the year it is 45,000, which was the 50,000 less the repayment of 5,000 based on the additional information. Okay, so that means our liabilities in the beginning of the year was 58,500, and at the end of the year was 61,225. Now, we've worked out the total assets, total liabilities, but now we have to work out the owner's equity amount. So the owner's equity in the beginning of the year is your 443,500 less your 58,500 gives you 385,000, whereas at the end of the year it was the 486,790 deducting the 61,225, and that gives you as 425,565 rand. Okay, now we said to work out the profit and loss, we need to do the movement. Now, I told you the movement is the opening balance to the closing balance. However, there are other things that would also need to be accounted for. So what I've done is I've taken the statement of change in equities format, and I started with the balance in the beginning of the year, which agrees to what I've calculated here at the top. Then I've got the balance at the end of the year, which also agrees to what I've calculated here at the top. Okay, so we know the movement between the two balances would be your profit, any drawings, any capital contributions, movements. Now we know based on the information, there's no additional contribution during the year. However, the second last bullet point talks about 23,000, which was taken in cash for personal use, which is the drawings amount, which is a negative amount, so a negative movement. So that means we now need to work out what is the profit for the year, and that would be our balancing figure. So what we do, you can do it one of two ways. So you can either take the 425,000, you add the 23,000, deduct the 385, or you can take the 385, deduct the 28, deduct the 425, and then you would get to the amount. So the profit for the year, or the profit, let me just make sure I've calculated correctly. So the profit for the year was 63,000. $63,565 based on the information if you use this format. Okay, so that means let's quickly do it. So I've taken, let me just make, so you've taken the closing balance, I've deducted the opening balance, which gives me a movement, initial movement of 48,000. So normally I would deduct the drawings, but because I'm working backwards, I would add the drawings back. Now, because my drawings is negative, that's why I deduct the negative of a negative, which is actually a positive in Excel. So that's how I got to the 53,000. Okay, so that's if I work it backwards. If I work it from the top, I would take the 38,500, I would add the 23, and then I would deduct the closing balance, which would give me a negative, but then it would be the opposite signal in the calculation. Okay, so that's, or you could just deduct the 425 at the front. Let's just do that. And deduct the other amounts, and then you would get to the same. Okay, so that's how you had to work out the profit based on this information. Okay, do you guys have any questions on working out the profit and loss based on a scenario like this? The guys online, do you have any questions?